The way we pay has fundamentally changed in recent years. Payments have evolved from an explicit behaviour or action to something that's almost incidental, a swipe of the phone, a watch, and we're barely conscious of it. Contactless payments using a chipped card, a smartphone, a connected watch, or some form of wearable have become the default payment method for the majority of customers around the world. So where to from here? What will payments look like in 10 years' time? And will we see as much of an evolution over the past that we've seen in the past? Will we see that in the future as well? My name is Olivia McArdle. I'm the Head of Payments and Deposits in Macquarie's Banking and Financial Services Group. Joining me today to discuss the evolution of the payments sector are Simone Joyce, the Chair of FinTech Australia and CEO and founder of payments software company Paperplane, and Robert Milner, the Chairman of Australian Payments Council. If you've got any questions for Simone or Robert during the session, please add them to the Q&A box at the bottom of the player. And welcome to you both, Simone and Robert, and thanks for joining us today. So my first question is for both of you. The payments sector has been one of the largest growing and most invested in sectors within the fintech industry. What's your view on why it's become such a big business? Let's start with you, Simone, and then we'll hand over to you, Robert, for your views on the topic.
Thanks, Olivia. You're right. It has become one of the most investable and invested in tech landscape, both here in Australia and across the world. I think that there's a few reasons for that. First of all, obviously, payments are the lifeblood of any business, from a small enterprise through to a large enterprise, and there's multiple different technologies and payment solutions to match all of those different business types. With that comes great opportunity to constantly evolve and develop new service offerings and value add into the core payment structure. We've seen companies with incredible valuations like Stripe move from payments into adjacent services that all come back to how that business is processing their financial being. More recently, though, we're seeing a lot of evolution in the type of payments available to businesses, and the providers that give access to those businesses are evolving as well. So things like payment initiation via open banking, or CDR as we know it in Australia, through to things like smart payments via a device. But we're also now starting to see appropriate friction come back into payments, which means that there is another service layer that can be surfaced to consumers to really make informed decisions before a payment takes place. So coming back towards more friction in a payment means more opportunity as well. So I think that there are a lot of contributing factors as to why businesses in the payment space are seeing a lot of investment and really high valuations.
Thanks, Simone. It's interesting you talk about those appropriate friction and where the adjacencies are. Robert, what's your views on this topic?
Thanks, Olivia, and it's great to be here with you and Simone to talk about this today. Obviously, I agree with everything that Simone just said. Perhaps from my perspective, there's three factors that we're dealing with here. Firstly, the trends in technology and regulation and behavioural shifts by end users. Secondly, access to data and information as we see a growing convergence between payments and information. And then thirdly, around the expectations of end users and how end users are driving for more services, the types of services that Simone was talking about. And that has created a gap between the services that were provided by the incumbents, particularly historically the banks, as we've seen changes being driven initially through large and global merchants and retailers using fintechs like PayPal, Braintree, etc., to more recently as we drive it down to smaller businesses and we see fintechs like Zella, Paperplane providing services into that space. So I think those three factors are driving all of the opportunities that Simone was talking about, all of the business that we're talking about. And actually those three factors I think are going to be very much of the trend as we move forward into the future. Thank you.
Yeah, thanks, Robert. It's good to bring out those three factors, and as you say, around the data, it brings to mind that famous quote that I think it's something along the lines of, if you're not paying for the product, you probably are the product. So it's a good reminder for us all in that data space. So Simone, we said in the introduction that you've founded and you now run your own payment technology company, which is called Paperplane. Can you tell us a little bit more about the journey you went on and any views you have on being an entrepreneur within Australia and the Australian payments industry?
Absolutely. So obviously growing up, I didn't decide that I was going to be involved in the payments ecosystem. I don't think that's something that any child says they want to do as they grow up. I fell into the payment space and immediately saw both the opportunity and the beauty of a well-run payment system. The problem that Paper Plane set out to solve, the deeper we got into it, the more we realised it was really an ecosystem solve, and they're very difficult problems to solve. And I think this comes back to where we think payments are going in the future, which is a connected payment between a consumer and a business, and providing a system that actually creates that connection is really valuable. For us, we were looking at scheduled payments, so any payment with a future payment processing date that's been pre-approved. It could be a subscription or a membership or a pre-approved invoice. And the variable factors that come in around that really do need a service layer for the business and the payer. But for us, we realised there was one extra stakeholder involved in that payment, and that was the bank that was sitting under that payment. So we took an approach that we started out by solving problems for the businesses and consumers to make sure we really were solving those problems at that space, but then moving up into the banking space to become a provider into the bank themselves to help solve that problem from the top down. And obviously next year we'll see the evolution of that with Pay2. And I think it's a very exciting time to be both involved in payments in Australia and to be involved from a fintech perspective. I think that we're very strong in Australia as far as our fintech prospects go. So it's been a really pleasurable journey for me, not without challenges, but what journey is.
Thanks, Simone. I know a number of us are very excited about Pay2 and the mandated payment service. I think that can be will be quite a game changer, particularly for businesses in Australia. So, Robert, your journey in payments has been more from the governance and policy perspective. You've also got some great global views as well. We know that Australia is working towards a consolidation of our payments governance, so with EFTPOS, NPP and BPay. Is this something you see happening around the world?
Yes, I do. And I'll sort of put it in the context of the Australian scene and then talk a little bit about a few countries. But I can't go without picking up on Simone's point. I think the definition of admiring the beauty of the problem has probably been a bit of a story of the Australian payment system. And now we've got people, fintechs and others, that are pushing past admiring the beauty of the problem and actually doing something about it, enabled by, I think, a progressive regulatory regime and more thinking around opportunities driven out of things like open banking, CDR, etc. So definitely agree with those comments. Firstly, we should remember that in the Australian situation, our payment system has grown up over 5 decades of different initiatives. You have to go back to the 60s for the BEX system to be put in place, the 60s and 70s for EFTPOS, the 90s for BPay, and then our fast payment rails NPP in the 2015-2016. So we've tended to have a fragmented approach to how we've developed our payment systems. And what we've seen is the consequences of that has been the way in which the payment acceptance processes have been able to develop and initiate different services around that because of the confusion of different forward roadmaps, of different investment timetables. And it's that sort of issue that we have also seen in overseas markets, which have driven to consolidation of domestic schemes in Australia, in overseas markets like the United Kingdom, Singapore, Malaysia. At the same time, you've seen international card schemes, and MasterCard's a great example of it, that have gone outside of their card processing role into actually developing their own infrastructure in a number of countries, in Canada, in India, in the Nordics, and in Singapore. So you've seen those developments of both the existing domestic schemes in a number of countries being rationalised to overcome the problems that were perceived. And then secondly, international card schemes and other technology companies starting to move into the rail provision. So the problem we have here in Australia and that we're trying to deal with at the moment is that the different payment rails that I said developed over those 5 decades don't really compete with each other. They provide adjacent services, but the way in which they are run independently and in an uncoordinated way has meant that we have a severe amount of dysfunction in the existing market, and it creates some misalignment and certainly makes it harder for organisations like Simone's and others, where they have to deal with multiple domestic card schemes to offer those services, rather than being able to go through one universal point of contact that is aligning that forward roadmap and providing interface so that we can get the services that end users want in a way that's seamless and frictionless, other than where those opportunities are created at the right points of friction. Thank you.
Yeah, thanks, Robert. It's a good history lesson there to hear about the everything from checks to BECS and all the way through to NPP and where we are now. And for a reasonably young country, we've certainly got some complexity in our system. So good to see what other countries are doing in that space. So Simone, back to you. What are some of the trends you're seeing from payment companies globally, if we stick to that global theme? And what about lessons and insights that we can take note of here in Australia?
I love hearing the history of payments as well. I could listen to Robert talk about that all day. So look, overseas, I think most relevant for Australia right now is the question of payment initiation as a construct of open banking or consumer data right in Australia. To date, our consumer data right is read-only, which means that as a consumer, you can give your data to a third party for analysis and to make recommendations, but that third party can't actually do anything on your behalf. This can apply to switching a bank account, but more pragmatically for this discussion, it can also apply to making a payment. So in Australia, we've seen that payment initiation is something that's really, really being demanded, particularly by fintechs. And we've seen Pay2, as we mentioned before, coming in to fill that space to start with, not as part of CDR, but as part of the NPP payment infrastructure. What that means is that we'll be able to see BECS starting to reach end of life from the 60s through to now, but we'll also be able to see a lot of interesting services and products being spun up by fintechs, and people will be able to set up their payments and control them in a more autonomous way. And I think that's really fantastic, particularly if you've been bitten by signing up to a gym and then never seeing those payments again. You'll have a little bit more control as a consumer. Other trends that are happening globally, I think, really relate to how we've shifted online from a necessity perspective. Particularly last year, a lot of businesses suddenly realised they needed to offer online payment facilities, and we've seen a shift across, declining cash, declining point of sale. So I think that's a really interesting trend that we'll continue to track. I also think that we'll be seeing things like payments associated with digital identities start to come in more and more, particularly in relation to preventing fraud, doing know your customer checks, and even ID checks to do things like buying alcohol online, for example. So overseas, I think that there's some interesting trends, again, coming back to the regulatory landscape that Robert was talking about. We're also updating our regulatory here, enabling better access to infrastructure, hopefully, which will mean that we'll see the drive in more and more innovative products and services being created on top of our payment infrastructure.
Yeah, thank you. Thank you. The point about digital ID, we'll touch on that in a second, so I'm keen to get further into that. And then just to build on, that Pay2 and things like the mandated payment service, putting that control back in the hands of the consumer. I think we've all had a subscription being charged to our credit card that is very difficult to turn off. And, the many things that are exciting about CDR, but one of those is putting that power back into the consumer's hands so they can control their banking as they see fit. So, Robert, we've touched on a few things around infrastructure and the regulatory environment within payments and how it's continually evolving. We've also seen on the consumer side, as I've been saying, around CDR, open banking and NPP with real-time payments. So we're catching up on the technology capability side of things. In your view, how are these two sides coming together to change a consumer's expectation of what they want from a digital payment or just being able to pay for something?
Look, I think the objective of what we're trying to do is deliver better and more seamless payment experiences for consumers, but giving them that control that you and Simone have talked about, control and visibility over their payments. So I think the objective is very clear, and I think technology and consumers' understanding has driven them now to expect that. The question for us here in terms of all of the things that Simone was talking about, both in terms of some of the regulatory things we're doing, plus some of the structural things that we may need to do, is to remove those sources of friction that stop us from delivering on that objective and delivered on more integrated payment systems. And you both talked about Pay2 and so on as to how that is going to do it. And that will allow customers to and consumers to increasingly align what they want to do from digital forms with other aspects of their life. So I think both the objectives and the outcomes that we're trying to achieve are pretty clear. It's a process now of working through a number of the regulatory changes that we have made, as well as some of the structural changes, at a time when there is so much change going on. We talked briefly about COVID, you talked about the changes in technology. So for a lot of consumers, the biggest part will be unpacking this and explaining it and ensuring that we bring consumers along with the requisite amount of trust and confidence in this. You both referred to there's a lot of fraud in the system, there's scams in the system, so that we need to do all of this in a way that creates great outcomes for consumers, but not increase the risks to them or leave them behind because they don't understand actually what is happening.
It's a great point in terms of that trust and confidence, and I think it's incumbent on all of us to remember that there's a huge portion of society that's not fundamentally comfortable in that digital world, and how can we, as you say, bring them along with us and not leave them behind, and yet improving that customer experience at the same time. So we touched on this before with Simone, but a question for both of you. If we look at the technology behind all of this and making a payment better experience from a digital perspective, digital ID is often talked about as a foundational part of the infrastructure. Can you explain a bit more about why that's so important for payments? Simone, we'll start with you and then we'll throw over to Robert.
Yes, so as I briefly touched on before, having digital ID that you can access at the same time as you're making a payment online, and that can be verified potentially with zero proof of knowledge from the business, is transformative in that it takes away a lot of the barriers of traditional know your customer checks and traditional due diligence about where a payment is originating and where a payment is going. So thinking about everything from how do you actually ensure that the person who's given you this bank account for settlement is that person and they are who they say they are, all the way through to how do I make sure that the person purchasing this particular beer online is over 18. So currently those processes have a lot of inherent risks and a lot of inherent cost in Australia due to various different data holders. Bringing a robust digital ID framework in under the auspices of, I think AusPayNet's looking after it at the moment, of Trust ID, means that a business could potentially verify who you are without needing to see any sensitive documentation. So immediately taking themselves out of scope for compliance and obviously all of those costs that are associated with that. And then associating that back to a payment method, and whether that's a fast payment bank to bank, whether it's a Pay2 payment, whether it's a scheme card payment, it really just streamlines the whole process. I think in Sweden, where they're vastly cashless, one of the first ingredients for that move to cashless was having a really good digital ID system. And I think in emerging countries where there is a population of people that may not have access to banking simply because they don't have the right identification, there's suggestion that digital ID will actually start bringing more financial inclusion across to those environments as well. So it's a really interesting, really powerful thing, and I think we'll be seeing more activity in this space in Australia in years to come beyond what we're seeing with EFTPOS and Australia Post's solutions.
Thanks, Simone. Robert, what are your views around the digital ID space?
I could speak for the rest of the day on this. We, as Simone mentioned, the Australian Payments Council drove a project over the last 18 months to set up a digital ID trust framework, similar to one that's been, or some that have been used in Europe. AusPayNet is now working with the industry to encourage industry participants to put in place those trust frameworks. However, I think the point that we need to make here is that there's a clear use case, a clear need case. I mean, the internet doesn't have an identity layer, and the consumers and merchants online can't verify who they are to each other, and that's quite critical for people making payments. However, implementing and making a system work for digital identity needs trust and confidence of the community in that system, as well as the outcome creating trust and confidence in who they each are, and that they want payments to be made to each other. And that's going to become even more critical in the future when payments do become all instant, whether credit, debit, or otherwise. And so for us, I think and this is for the payments industry, I think we understand this is a really critical factor. I think we are struggling in Australia to put in place some really meaningful examples. As Simone just said, we've got some abbreviated use cases through EFTPOS and Australia Post, but not more widely. So we need more generation of the use case through the payments industry, but we need a huge education process for the public, because the public are very concerned about this, and you can see the application of what's happening around vaccinations for COVID on this. People will be worried about their digital ID. Is it being used by government for other purposes? Can it be stolen? So in one way, it's great for the community. In another way, they'll have a lot of apprehensions about how it's going to be done. So I think digital ID is the absolute foundation piece for not only the payments industry in terms of what we're seeing going forward, but the digital economy more broadly. And we have a long way to go to educate and get confidence in the public about where this fits and how it operates and why it's safe for them.
Thanks, Robert. It's similar points to what you raised before around that trust and confidence. And as you rightly point out, so key that we bring the general public along the journey, and in terms of that. Otherwise, it would be viewed with some level of scepticism, you would think. So just one more question, and then we've got a couple of questions here from the audience. So just one more for both of you. So we've talked a lot about payments industry, how it looks today, where we've come from, the journey we've been on. What do you see in the future? What's sort of one thing from both of you that you think we'll really see in that 5 to 10 years to come? Robert, we'll start with you this time.
Well, I think the evolution of payments, Simone mentioned about cashless societies overseas. I've got some RBA data that's quite interesting that over the last few months, as a result of COVID, we've had cash withdrawals fall a further 16% below pre-COVID levels. They're already falling. Checks have fallen by 42%. So those traditional payment methodologies, cash and checks, have fallen. We see credit card use is 5% below, while debit card use has increased. So I think the whole movement to contactless, to digital wallets, will continue to be a big driver for those factors we mentioned in the very first part of the discussion around technology developments plus behavioural shifts by end users. And then the added part to that is the transition to different rails. So Pay2, quite critical for a lot of businesses. The movement of things like BECS and BPay type services further to fast rails. I see that. And then obviously the bigger shift is around more generally account-to-account type transactions.
Yeah, I think, gosh, there's some big percentages that you were quoting there about the shifting away from your sort of more traditional payment mechanisms of cash, cheques and credit cards. So, some big changes there that we should see going forward. Simone, what's your view? Next 5 to 10 years, what are you seeing in your crystal ball?
So, building on what Robert said, I think that we'll see some evolution in how consumers choose to interact with their payments. And I think that choice will extend to not just how they pay, but how they choose to view how they've paid. So bringing all of their payment data from disparate sources across multiple banking partners into the one spot to manage as they see fit. And I think we'll also start to see a shift away from a card going straight onto those traditional scheme rails. Potentially there'll be a switch over to fast payments, taking out things like BECS and to some extent cash and obviously cheques reduces the latency in the payment system, which means I think that liquidity issues will be really interesting for small businesses, even through to things like payment aggregators and settlements. So we no longer have a 3-day delay before we can push through liquidity on a BECS payment, for example. And for cash, there's no longer having to carry that to the bank to get it into financial systems, to pay suppliers, et cetera, et cetera. I think we might also see the value of how we're paying suppliers and how businesses are receiving payment from their customers and how they're on paying that to suppliers and wages. We might see some of that starting to migrate above the traditional payment systems into a world where potentially a business operates purely in cryptocurrency. They receive payments in crypto and they make payments in crypto. There's no need to convert that back to fiat for any reason regularly. I think that watching how cryptocurrencies and the way that we pay becomes more accessible to use crypto as a viable method of payment will become more and more obvious as payment gateways come into shopping carts where you can pay with crypto, but potentially also at point of sale physically as well. And I think that all those different data sources, as consumers, will be able to go, hey, I want to see this all in the one spot. And it will no longer be about who's top of wallet for the brand of card, but who's top of digital interface for where all of that data is being managed by a consumer.
Wow, some big predictions there. We'll have to get you back maybe in a couple of years to see the accuracy of your crystal ball. But I love the one about operating above the financial system and not even going through traditional rails. So that's a big game changer. So we've got a couple of minutes left, just one question from the audience here. Can't go through a session without one of these questions. So the impact of COVID has affected all areas of our lives and accelerated the use of technology generally, payments being no exception. We've seen a number of providers stop accepting cash and different things in that space. So how have you seen the sector change over the past 18 months? And what's maybe one opportunity that you see for payment providers to deal with? I'll give you both one minute each. So Robert, we'll start with you.
Thank you. Look, I think this is a bit of a plug, I think, for the domestic consolidation. I think trying to shorten the space between changing end user needs and their requirements and both the payment rails and then the payment processes is important. I think we've got to be much more nimble than we are. We've got to be able to respond to changing requirements and be able to innovate more quickly than we have been.
Thanks, Robert. Simone?
Look, I think the same thing around being nimble and responsive. Certainly across the height of the pandemic, we saw more than ever before some of the previously considered nice to haves in our system in so far as being able to self-manage payment agreements became very relevant. And I think that will continue to be true as we see, well, today even we're seeing different changing business environments very quickly. So ongoing relationships need to be able to adapt as well. And obviously the shift to being able to have a reliable online and relevant and accessible and secure payment process for customers who can no longer visit your business is obviously something that we saw really come to the fore last year.
Thanks, Simone, and thank you to both of you. Thank you to Robert and Simone for your time today. We've touched on a number of topics. We've talked about trust and confidence, which I think is so key to this payment sector, data and the power of that data, and also it being in the hands of customers to control what's happening with their payments data. And then innovation, whether it's, I think, Simone, you talked about appropriate friction, reducing latency, increasing speed, and we might even be faced with the one of Simone's predictions that the payment is happening just completely outside of the system. So I mean, I think there's so many things happening in this space, and it's been great to talk to both of you about where we've come from and where we might be heading. So thank you both for your time.
Thank you, Olivia. It's been a pleasure. Thanks, Robert.
Thanks, Simone. Thanks, Olivia. Been great.